Your employer might be offering you free money right now, and you don't even know it. I'm going to explain this as simply as possible, with real numbers and actionable steps. Let's get into it. Here's where it all begins. A 401k is a retirement savings account offered by your employer. You contribute money from your paycheck before taxes, which means you pay less in taxes right now. The money grows tax-free until you withdraw it in retirement. Moving on to the second point. Many employers match your contributions up to a certain percentage, typically 3 to 6%. If you earn $50,000 and your employer matches 4%, that's $2,000 per year in free money you're leaving on the table if you don't contribute. This next one surprises most people. Traditional 401k contributions reduce your taxable income today. If you're in the 22% tax bracket and contribute $10,000, you save $2,200 in taxes this year. Your money then grows tax-deferred for decades. Fourth, and this is really important. At minimum, contribute enough to get the full employer match. Ideally, aim for 15% of your income. The maximum contribution limit is $23,500 per year in 2025. And here's the part that ties everything together. Don't leave the money in the default money market fund. Choose a target date fund or an S&P 500 index fund. Don't take early withdrawals, which trigger a 10% penalty plus taxes. And never skip the employer match. If you found this helpful, make sure to subscribe and hit the bell icon so you don't miss our next video. Drop a comment below and let us know which tip you're going to try first. See you in the next one.